Good morning. Today we're diving into a topic that often makes headlines and can cause confusion: the concept of a net loss for a major company. When you hear that a massive corporation has reported a net loss, it might sound like a red flag, but what does it actually mean for the business, its employees, and even the broader economy? When a massive company reports a net loss, it can sound alarming, but what does it truly mean? Is it a sign of trouble, or could there be more to the story? A net loss occurs when a company's expenses exceed its income over a specific period. In other words, the business spent more money than it brought in, whether that's over a quarter or a full year. This is the opposite of a net profit, where income surpasses expenses. Think of it like your household budget. If you spend more than you earn in a month, you end up with a deficit. You might have to dip into your savings or borrow money to cover the gap. The same principle applies to companies, just on a much larger scale. For companies, this means dipping into reserves or taking on debt. It can also mean making tough decisions, like cutting costs, delaying projects, or even restructuring parts of the business to get back on track. However, a single net loss doesn't always spell disaster, especially for a company with a long-term vision. Many successful businesses have reported losses during periods of growth or transformation, only to bounce back stronger in the future. Sometimes, a loss is due to a one-time event or strategic investment. For example, a company might spend heavily on research and development, new technology, or expanding into new markets. These investments can lead to short-term losses, but set the stage for future profits. Investors look beyond the negative number to understand the context. They analyze whether the loss is part of a bigger plan or if it signals deeper issues. The reasons behind a net loss matter just as much as the loss itself. For state-controlled entities like Argentina's YPF, the story is even more layered. These companies often have responsibilities that go beyond just making money. They balance profitability with national interests, like energy security and economic development. Sometimes they are required to make decisions that support the country, even if it means taking a financial hit in the short term. A net loss might result from policies to stabilize fuel prices or infrastructure investments. These actions can benefit millions of people, even if they temporarily hurt the company's bottom line. When we see a net loss, it's our cue to ask more questions and understand the full story. What caused the loss? Is it a sign of trouble or a step toward future growth? The answers are rarely simple. YPF's recent third-quarter loss reveals challenges but also highlights a promising shift in Argentina's energy landscape. By looking deeper, we can see how short-term losses may pave the way for long-term gains, innovation, and national progress. Understanding YPF is crucial to understanding Argentina. YPF is Argentina's flagship energy corporation, deeply intertwined with the nation's history and economy. Founded over a century ago, it remains a major player with the government as its majority stakeholder. YPF is the largest company in Argentina, leading in oil and natural gas production. Its performance impacts the daily lives of Argentinians and the national economy. YPF's ability to unlock vast energy resources is key to Argentina's economic strategy and future prosperity. Let's dive into the numbers making headlines. YPF reported a net loss of $198 million for the third quarter of 2025, a significant turnaround from last year's profit. This loss signals substantial costs outweighing revenue. YPF's total revenues were $4.64 billion, 12% lower than the previous year. This drop in income is crucial, influenced by lower international oil prices and production shifts. Analysts focus on adjusted EBITDA, which was $1.36 billion, stable despite the net loss. This suggests the core business remains healthy, with other financial factors causing the loss. The stability in adjusted EBITDA shows resilience amid financial turbulence. The main culprit was a major accounting item impacting the bottom line. Despite challenges, YPF's core operations remain steady. What pushed YPF into a $198 million net loss? A significant deferred tax charge. Deferred taxes arise from differences in financial and tax reporting. This non-cash charge increased expenses on paper, wiping out potential profits. Compounded by lower revenues, YPF faced a 12% decline to $4.64 billion. The revenue dip was due to global energy price fluctuations and strategic production shifts. YPF's production fell by 6%, focusing on unconventional shale over mature conventional fields. This strategic pivot is a bet on future growth, despite short-term financial impacts. To truly grasp YPF's evolving strategy, it's important to first understand the fundamental difference between conventional and unconventional oil extraction. These two approaches represent not just different technologies, but entirely different philosophies in how oil is sourced and produced. Conventional oil is found in large, easily accessible pools within porous rock formations. Extracting it is relatively straightforward. Think of it as drawing water from a well. This method has powered the oil industry for decades, providing a steady and reliable source of energy. In contrast, shale oil is locked away in dense, compact rock layers. To access it, companies must use advanced techniques like hydraulic fracturing, or fracking, which involves injecting high-pressure fluid to release the trapped oil. This process is more complex, costly, and technologically demanding, but it opens up vast new reserves. Recognizing the decline of its conventional oil fields, YPF has made a bold shift toward developing Argentina's rich shale resources. This transition marks a significant change in the company's production strategy, requiring new skills, equipment, and a willingness to embrace innovation. This pivot demands substantial upfront investments in technology, infrastructure, and workforce training. However, the potential rewards are immense, promising to revitalize YPF's production and secure its future in a rapidly changing energy landscape. While YPF's total oil production recently fell by 6%, the company's shale oil output surged by an impressive 35%. This remarkable growth highlights the effectiveness of its new strategy and the untapped potential of Argentina's shale reserves. Today, shale oil accounts for a staggering 70% of YPF's total oil output. This transformation has turned YPF into a true powerhouse in the unconventional energy sector, setting new benchmarks for the industry. The results speak for themselves. Explosive growth in shale production is fueling optimism within the company and across the Argentine energy sector, signaling a new era of opportunity. YPF's focus on shale is more than just a tactical move. It's a strategic bet on long-term returns, energy security, and technological leadership. The company is successfully navigating the complex transition from conventional to unconventional energy, adapting to new market realities and positioning itself for future growth. This strategic shift is not only vital for YPF's future, but also for Argentina's broader goal of achieving energy independence and economic resilience. Despite facing financial headwinds, the booming shale segment stands out as a bright spot, driving growth and attracting new investment even in uncertain times. YPF's ongoing transformation is a testament to its forward-thinking leadership and unwavering commitment to innovation. By embracing unconventional energy, YPF is not just adapting, it's leading the way, shaping the future of Argentina's energy industry and setting an example for others to follow. YPF's 35% surge in shale production is a testament to a strategic revolution. Shale now makes up 70% of YPF's crude oil output, defining its future. YPF's shale production hit a record high, showing continuous improvement. This focus on shale offers long-term energy security and economic stability. Shale developments are predictable, attracting investors and ensuring steady resources. YPF's shift to shale secures its future and Argentina's energy independence. Despite transitional financial results, the payoff is undeniable. Shale output is the engine of growth, transforming YPF's fortunes. YPF is turning Argentina into a significant global energy exporter. The company's strategic pivot is a game-changer for the nation. Vaca Muerta is Argentina's key to unlocking its economic future, a vast resource that could transform the nation's destiny. Located deep in the windswept region of Patagonia, Vaca Muerta is one of the world's largest and most promising shale formations, stretching across thousands of square kilometers. Beneath its rugged surface, Vaca Muerta holds immense oil and gas reserves, an energy treasure that rivals the biggest fields on the planet, with the potential to fuel Argentina for generations. Yet, only about 8% of Vaca Muerta has been developed so far. Despite this, it already accounts for an astonishing 64% of Argentina's oil production, showing just how rich and productive this formation truly is. This remarkable productivity highlights the untapped potential that still lies beneath, waiting to be harnessed for the country's benefit. Developing Vaca Muerta further could be the solution to many of Argentina's economic challenges, from job creation to stabilizing the national currency and boosting government revenues. By increasing domestic oil and gas production, Argentina can reduce its reliance on expensive energy imports, keeping more wealth within its borders and strengthening its economy. As production ramps up, Argentina has the opportunity to become a major energy exporter, supplying global markets and earning valuable foreign currency. At the heart of this transformation is YPF, Argentina's state energy company, which plays a critical role in leading the Vaca Muerta project and driving innovation in the sector. The success of Vaca Muerta is already attracting international investment, creating new partnerships, and boosting confidence in Argentina's economic future. The future of Vaca Muerta and YPF are closely linked, and together, they hold the promise of true energy independence for Argentina. Efficient and responsible development of this buried treasure is essential, not just for economic revitalization, but for securing a brighter, more prosperous future for all Argentines. YPF's downstream operations are crucial to its success. Refining and selling products provide stable cash flow and customer connection. YPF's refineries turn crude oil into gasoline, diesel, and more. In Q3 2025, YPF's downstream business showed remarkable strength. A 97% refinery utilization rate indicates high efficiency. This efficiency maximizes value and minimizes waste. YPF's domestic fuel sales increased by 3%, gaining market share. Downstream strength supports YPF's upstream growth and stability. Integration from wellhead to gas station gives YPF a competitive edge. YPF's transformation is a bold bet on the future. The company sacrifices short-term profits for long-term gains. YPF's strategy aligns with Argentina's economic goals. Boosting exports brings in vital US dollars. YPF is key to stabilizing Argentina's finances and attracting investment. Success in shale has national implications, reducing vulnerability to shocks. Vaca Muerta development diversifies the economy and creates jobs. YPF's journey mirrors Argentina's path to energy independence. Record-breaking shale production signals potential economic boom. YPF's transition will define Argentina's future, and we'll be watching.